Well, good morning, everyone, and welcome to Coffee and Grain Marketing with Dr. Sing-Ki Lee. OSU Extension and the Farm Financial Management and Policy Institute are pleased that Dr. Sing-Ki Lee, who is an assistant professor in the Department of Agriculture, Environmental and Development Economics, has offered to provide a quarterly update to discuss the World Agriculture Supply and Demand Estimates Report, better known as the WASDE report, and its implications for Ohio crop producers. I'm David Marison, field specialist in farm management, and I'm pleased to be moderating this morning's coffee session. Sing-Ki received his PhD in economics from Iowa State University and then joined us here at the Ohio State University. His areas of expertise include agriculture economics, environmental and resource economics, and industrial organization. Sing-Ki has been very, very busy here lately, traveling across the state, speaking at OSU Extension Ag Outlook meetings, as well as teaching a course on campus. So I'm really, really pleased that we're able to catch up with Sing-Ki this morning to kick off our week to start talking about the grain market and the WASDE reports. Just a few housekeeping items that we have for you today. First, notice that we are recording this, so if you want to go back and revisit this report, it will be on the farmoffice.osu.edu website. As well as we will be using a few polls here later in this half hour to ask some questions of you. And then also, if you have questions at any time, drop them into the Q&A, and I will be monitoring those as we go through this morning. We're going to reserve the chat feature to drop some information for you there. So if you have some questions that you would like to ask of Sing-Ki, just drop them in the Q&A. Other than that, Sing-Ki, I know people were up really, really late last night watching that the Super Bowl. I know people are making plans for their Valentine's Day tomorrow, February. We think about the Super Bowl. We think about Valentine's Day. We think about National FFA Week and President's Day. Usually we don't think a lot about the WASDE report. Usually it's a pretty quiet month when it comes with respect to the WASDE report. So first, welcome, Sing-Ki. Thank you for joining us for coffee this morning with my favorite Ohio State mug. But we want to jump in there. The February WASDE report was released last week. So let's jump in. Did you find anything significant, and what's a snapshot of the market right now?
Thanks a lot, David, for introducing me, and thanks a lot, everybody, and good morning. For the WASDE report, the February one, I think it was not as much exciting as Super Bowl or Valentine's Day event. So no, I think there was no shocking news in February WASDE report, and it is actually not surprising as we did not see any significant precursors during the last few weeks. So market was quite quiet, and the background image is actually showing the USDA official highlights of the February WASDE report. Probably the most relevant thing to our talk would be the first bullet point. So USDA adjusted down Argentina crop production again after lowering its projection in February. So basically a consecutive adjustment during the last 2 months. So Argentina is now expecting pretty much lowered production for corn and soybean. So and as the other two bullet points are not of our interest, I'm not gonna dive into this. But when looking at the graph on top of my head, you can see Argentina corn production is approaching the orange level. So 2020. So this year is actually the black line, and the orange line is 2021 level. So which is the 8-year lowest. And as you can see, this year is actually pretty much getting close to the 8-year lowest. So basically, 2021 was where Argentina farmers suffered a lot from the La Nina induced drought, and this year is actually showing very similar pattern. So maybe the situation itself can potentially soften the export competition for the U.S. farmers, which meaning that it can be kind of a little bit of opportunity. But the question will be how much Brazil will offset the Argentina's loss when they are harvesting. So let me quickly show the snapshot of the market. So this is the corn and soybean balance sheet, and I cut out some details to put them in one table. So the big story is more or less the same as previous months for all crops. So no updates, as you can see in the production side, and there were minor changes in demand. As a result, if I have to summarize this market situation in one sentence, I would say maybe in the downward race between supply and demand, the supply wins, and we are expecting strong prices. And if I have to pick something unexpected from this table, maybe I would pick the adjustment in ethanol. So I rather expected the export projection could be lowered, but it seems USDA reflected a weak ethanol production progress reported by EIA in recent weeks and slightly adjusted down and lowered the ethanol corn demand by 25 million bushels. Soybean crush was also adjusted down by 15 million bushels, which seems to be a typical fine-tuning process done by USDA. So I'm not surprised by these like minor changes. So both corn and soybean demand adjustments are less than 1% change in terms of the total demand. So its impact on the market seems to be limited. Also, like as we are interested, I usually do not talk much about the wheat, but as this talk is basically coffee and grain, so let me talk a little bit about wheat as well. So the wheat market is showing a very similar trend as corn and soybean. As you can see, the production side, the production down was bigger than the demand, and actually here the production total supply was down by 5%, but the demand has gone up by 1% compared to last year. So certainly this supply and demand balance is making the bullish prices, and the season average price is projected to be 18% higher than last year. So obviously we can see the short supply is the major factor of this strong price. Here, the interesting thing to me is the fact that the production itself did not change compared to last year, as you look at the table, but the total supply has gone down by 5%. So I was curious what's going on, and in fact, the supply decrease was mainly due to the decrease in the beginning stock, meaning that the consumption was greater than the new production last year. And actually, that was not just last year event. When I checked the ending stock during the last 4 years, it has continuously gone down since 2020. So for example, compared to 2019-20 market, which had over 1 billion bushels of ending stock, we now have only 55% of that as an ending stock. So it is really a huge drop. And the main reason was probably wheat production has not as much like good or increasing as we have done like before 2000. So that was one reason. Although like COVID and that really affected somewhat the demand shift, it played as a demand shifter, but it actually didn't like dramatically change the total consumption itself, because people of course need food, but also they cannot food like maybe twice or like double or triple compared to before COVID. So the main reason of this phenomenon is basically the production side issues. And so like when you look at the graph on top of my head, actually it is showing that the wheat export level is relatively low, and actually historical low level. So although we are seeing very low export level in wheat, I believe the low export impact on wheat price will be limited unless other like black swan like war in Ukraine shows up, because it is not just really like driven by the export or other reason, but basically it is driven by the supply side. So I'm not worried much about the wheat exports as the at least like within a short term. Of course, in the longer term, it can play a role, but certainly it is currently the main issue is the production shortage and the low ending stock. I think those are kind of the overview of the market we can see. So yeah, I think
Well, Sing-Ki, you mentioned there, as I see about the wheat export, so it makes me think about the export markets and what may be looking ahead. So what other major global factors are you seeing that could potentially affect our US market going forward?
Well, like certainly, as we have seen in the corn and soybean balance sheet, we are actually struggling a lot in exports, and that was mainly due to the Latin American countries' progress and production impacts of them. So probably I will like maybe the most like eye-catching graph that I got is this corn exports of the top 4 global suppliers, and maybe before that, let me actually show one interesting thing. Nowadays, maybe people are very interested in the open AI and artificial intelligence. So actually, like out of curiosity, I put this question to and asked it to the open ChatGPT. So why U.S. grain exports are so low this year? And this was actually the main points of what ChatGPT gave. So there were 5 takeaways, and of course, excuse me. Some of them are making sense and some of them are not. So maybe I will give 60 to 70 points to this answer. And it doesn't give me very detailed information. But anyway, interestingly, this AI also gave me like competition from other countries and logistics and transportation costs and trade attention. Okay, those are maybe what I can buy, but and the strong demand, domestic demand, which I don't buy. And the 5th one is weather condition, which is maybe too generic, but those are kind of what I got when I asked it to the open like ChatGPT. So it's quite interesting. So, but as you can see, the main factor is actually pretty much coming from the international competition, and this is actually the top 4 global suppliers corn export progress. And here the green line is US, and the orange line is Brazil, and yellow line is Argentina, and gray line is Ukraine. So as you can see, since 2010, Brazil and Argentina has gone up, but Brazil actually has gone up very rapidly, and now it is certainly top 2 global supplier of the corn. And especially this year, we are very close to the dead cross. So and unfortunately, it is not just a single year impact. So in 2012, for instance, it was just because of our issue. So our production was so low because of the drought, and then we easily recovered and we became the top global supplier for the corn. But for this year, this is really a systematic change. They kept increasing during the last few years, actually last 2 decades, and now really they are as much competitive as US. So this will be, of course, certainly the biggest like maybe market shifter for the rest of this market year, and also will be impacting the US maybe commodity market in the following years as well. So it is not just a single year impact, but we have to be conscious about this factor maybe later on as well. And maybe like one thing I want to highlight is Brazil during this time, actually before 2010, they heavily relied on the first crop corn, and then since 2010, actually they invested a lot second crop corn, and now the second crop corn is taking more than 50% of their total production. So as you can see, since 2010, their investments on the second crop corn was really successful, and eventually we are seeing this like production boost of the Brazil. And since 2019, even they started third crop corn, so they are actually like kind of keep like expanding the growing window and really like making the diversified production portfolio, so that like managing the risk as well as like getting the production competitiveness. So it will not be just like we are not seeing this as by luck, but this is really a consequence of their like continuous investments. And one more thing I want to share is the soybean side. Here, the soybean, this is the soybean export graph, and as you can see, the dark bar is actually indicating the Brazil export, and already like about 10 years ago, Brazil soybean export exceeded US. So they are now like #1 soybean producer and #1 soybean exporter. Maybe the most terrifying thing to me is when you look at the gray line, it is actually percentage exported by Brazil, which means it is actually like it has continuously increased. What does that mean? Maybe if I use an economic jargon, their propensity to export is too high. In plain English, I would say whenever they got an surplus and extra production, then most of them are actually shipped outside of their country and exported. So that's why they got increased production, and then the percentage of the export also gone up. And if this trend continues, then whenever they got some like extra amount of crop, those will be shipped outside and take some portion of the export market. So our global competition will tougher and tougher. So that's why I would pick maybe the global competition, especially Brazil, will be the biggest factor that will affect the US commodity market this year and maybe in the following years.
Now I have to ask Sin-Kee, are there, number one, I have to say, I love that you use some GPT things, because that is one of the hottest topics out there, talking about this artificial intelligence. But there's also some other things that have been interesting in the news, and especially when we think of China, and we know what happened a few years ago with escalated tension. So what are some other things that may be worth paying attention here?
Well, certainly, maybe the good thing from China is they finally like escaped from the stringent COVID policy, which means this will be potentially like boost the demand, and maybe US commodity market also gets some side effects. I mean, actually positive side effects. So kind of getting some like indirect benefits from this demand shifting effect. But at the same time, during the last few weeks, we actually had some escalated tension between US and China because of the national security issue, especially because of the Chinese spy balloon. And if it really affects and on the table when they are talking about the tariff and other trade policies, certainly it will harm US export progress. And nowadays, China is not heavily relying on US, but they actually diversified their import sources like Ukraine, Brazil, and US. So maybe they will like just shift the portion of the import from like US to Brazil, or put more weight on the Ukraine corn. So that can be actually one like kind of concerning part at the same time as well.
And I have to admit that when I was hearing the news of the weather balloons and that, I was thinking, what impact is this going to have on the markets going forward? It wasn't about national security. For me, I immediately went to what could happen to our commodity markets. Now, Sin-Kee, I think we want to, I'm going to shift to a gallery view here, because I think we want to launch a few polls and interact with our folks that are online. We see some great people online today. So we want to get some data from you or ask you some questions. So I'm going to pop up the first one. And Sin-Kee, can you see that okay? Let me relaunch maybe. I want to make sure. I'm going to end that one. Okay, so I think I got the relaunch program there. If you can answer the first question, are you a farmer? That would be good. Thank you. I was messing with my thing there. And great. And I see Patty put a question there in the Q&A, so that's good. So a reminder as we go here, drop those Q&As in, and we'll make sure that we get those questions answered. So are you a farmer? Beautiful. I'm going to end that poll and share the results. That's what we exactly think. 86% is farm in our farm clientele, and that's exactly what we want to do. So this is why we did this format, so that farmers could grab their cup of coffee and jump on here this morning. So there's the first question done. Now the second question, we're going to just bounce right through these so that we can get some of these. And again, I'm learning my polls. Okay, can you see those? Can you see this poll? No. I gotta relaunch it if it allows me to. Just give us a minute here, folks. David is doing his technology. All right, I'll maybe bounce to the next one and see if I can.
Mhm.
Sinky, I'm sorry about this, but I'm
Oh,
just
that's
having
okay. Yeah,
some.
we are all learning it. This is our first talk, so it's
Yeah,
not surprising. Well, while David is preparing for the poll, let me answer Patty's
thank you.
yeah question. So we got a question like how soon will we see the impact of sustainable aviation fuel demand on our soybean exports? I think this is really interesting and great question. So I'm also certainly interested in this like sustainable aviation fuel, like maybe in acronym SAF. Um, I know like a couple of ethanol plants are investing together with United Airlines and maybe some other like airline companies, and it is I think what I heard is probably like this will be 3 or 4 year term project. So maybe like if it really goes well, then maybe within 3 or 4 years we will see some movement in the aviation fuel demand, and eventually maybe some policies and regulations will set up as well. So I would say maybe in an optimistic view, maybe within 5 years we will see some change and maybe some like demand support from this aviation fuel. But of course, who knows? Like this is all about the R&D and investment. So sometimes the return is not that much satisfying. So even though we like these companies are putting nowadays about a few $1 million, but um, we are not sure. So still there is some uncertainty whether it can be actually realized as a policy and as a market. But I'm like pretty hopeful about it because not only like a couple of like ethanol plants, but also I know many like stakeholders and many associations are moving together and push hard for this direction. So hopefully we will see at least some like potential market is showing up from this aviation demand. I mean aviation fuel demand. Hopefully that answered your question.
Well, Sinky, I think my polls, something's going completely crazy with those. So we're gonna drop those off, and what we'll do
Okay.
is we'll send those poll questions out to the folks
Mhm.
as part of a follow-up survey because we're excited to see some of the data that is there. So with that, appreciate you answering that. But are there some closing remarks that you might have as far as, and that will give some people some time to ask some
Mhm.
Q&As, questions in the Q&A. What are some closing remarks that you might have based on what you learned from last week's report and what producers should be thinking about here going forward?
Well, maybe something I want to share is I actually didn't want to impact the poll, but excuse me. But this is something I got from the USDA like long-term projection and also like S&P Global Commodity Insights. They provided some like US level like corn and acreage rate. So this is the projection for the new crop corn and soybean. So basically it's talking about like 2023-24 market. And what you can see is based on the long-term projection, we are expecting about 3% increase in corn acreage and no change in soybean, but also S&P is like saying maybe about 2.3%, 2.2% increase in corn acreage and 0.6% increase in soybean acreage. So certainly we are seeing some signal that like farmers will go heavy on corn in the next market year. So it should be taken into account when you are deciding the corn and soybean acreage portion. Of course, maybe the value, if we do this poll, will be, we want to know, get some sense of how you think about the Ohio corn and soybean acreage. So for your information, once we get the poll results, maybe after this talk, and get the survey, maybe the benefit will be I'm gonna like write up the wrap-up report so that like summarizing the talk that I gave you, and also show the survey results so that like we can share some sentiments and beliefs or expectation about the market for the next year, so that it's not like maybe you can check whether like your idea or your perception is too optimistic or too pessimistic compared to others. So that is actually the whole purpose that we like intended to do the poll. And maybe some other thing I want to mention is uh, already Brazil has been stepping on the toes of the US in many export markets during the last 5 years. So it would be better to take the Brazil crop progress into account when planning the merchandising strategy for the next market year. So maybe according to the latest weekly weather bulletin by USDA, Brazil corn planting progress is pretty delayed. So let me show this. So this is actually the Brazil crop calendar, and I highlighted the second crop corn of Brazil, and usually their harvest timing is from like June to August. But considering their like slow progress in planting, there is a probability or possibility that we will see a mass corn supply from Brazil can arrive to the market in late August, which can lead to a significant extra price drop in the US harvest season. So it might not be a bad idea to lock in some portion of your corn sales through forward contracts even before planting, considering this Brazil situation. So I think that's what I want to say as a closing remark.
And I think Sinki, you just answered the first question in the Q&A. There are some
really?
amazing questions in the Q&A. The first was, do you recommend contracting grain for future years at this time? So that was a question there, and I don't know if you want to say anything more, but we have 4 questions there popped up.
Okay.
So the first about recommend contracting grain for future years. Don't know if you need to say anything more about that one. And
No, I think I already said the same thing.
Beautiful.
So yeah, yep.
Give you a chance to get a drink of coffee there. Next one is, what do you think of Dr. Zulauf's conclusion that the world needs to find 16 million acres a year for grain crops in the future? Then I'll just read through these so you can process. Next, is there room for grain expansion in Brazil? How much do they have for grain expansion? And a great question there at the end, what about Mexico and this GMO issue that we have going on down there?
Well, let me shortly answer those questions. So first, well, maybe like I admit, and maybe somewhat agree with Dr. Zulauf's point. So maybe we will need more like acreage, but I don't think there is very large potential that like US can expand the acreage, because we are actually, I believe we are like pretty doing well in terms of utilizing all the land potential. Of course, within this like same amount of acreage, what you can do is maybe improving the productivity. So kind of make it more like denser, I would say. But for the global food supply, maybe the only thing we have to do will be we just do our like sustainable production, and maybe some other countries will do increasing the acreage. And I'm not sure whether like this 16 million acre is like it's really hard to say the precise number. So like 16 million like acres or like 15 million acres. But certainly I agree with the point that we have to get more land for considering the increasing population of the especially in many developing countries. So agree with the points, but like not sure whether this number itself is acceptable or not. So maybe or maybe not. Maybe we will need more acreage, or maybe smaller than this. So it really depends on the population change. And for the other question, how much room for grain expansion does Brazil have in the future? I believe pretty large, because Brazil keeps expanding their like acreage. So maybe it's pretty consistent with what Dr. Zulauf pointed. So in that sense, it is like they have a great potential. So certainly I don't think their production will stop around this point, but will increase quite a bit within a short term, because they are expanding the acreage, but also they are actually improving the yield itself. So per acre productivity is is going up recently and continuously. So I don't want to say a specific number, but they have a potential that they can reach very close productivity as like what U.S. farmer achieved. So so that's why I'm a little bit terrified about the competition with Brazil. And let's move on to the other question. So what about Mexico and GMO? I know this is a very interesting topic because I think Mexico used to be very and still like a large customer of U.S. crops. So and nowadays they are putting some regulation about the GM crops and like still like the negotiation is ongoing. So maybe we have to keep an eye on this. But to me, maybe the underlying like driving force of this all this debate and discussion is more or less like political side, because maybe it is like the intention of like Mexico government seems to be like more focused on protecting the domestic farmers in Mexico. So it is not really, I think, food safety issue is really like highlighted and main reason of this discussion. So I'm not very much worried about the GM regulation. Certainly it can actually make some tariffs or like negative impact of our export, but will not be like really like make the Mexico market disappeared from our export side. So it's kind of a little, maybe I'm too optimistic, but like I think it is like if once the negotiation and the kind of agreements go well, then there will not be a big impact to the export side, at least for the Mexico.
And Sinki, and especially if the feed, the corn that's going for feed is able to be maintained, that will be the largest portion of what we send is down for livestock feed versus human consumption. So that'll be interesting to watch. And you have one last one before we close. Eric sends us one about how does the 568 million bushel ending stocks for wheat rank among average stocks for the last 10 years? So basically looking average stocks for the wheat. What's normal, I guess, is for those ending stocks on wheat.
Well, like based on my observation, like during the last 10 years, like especially before COVID, I think like more, I think slightly above 1,000 million or 1 billion bushels was the typical like wheat ending stock. But recently it has gone down continuously, and now we are seeing about like just half of them are just what we are having as an ending stock. So that's why it's quite interesting and also concerning as well.
Great, Sinki. Isn't it amazing how quick and how fast the half-hour coffee talk goes? So we want to say thank you for kicking off the week with us this morning, and want to let you know that some great Q&A questions there. But if you have questions that you'd like follow-up discussions with, drop those to lee.10168. So lee.10168@osu.edu. And usually I would tell you when you're leaving and exiting this morning's program to fill out the evaluation. So what I'm going to tell you is if it bounces you to another browser, ignore it. We'll take those poll questions, we'll put those into the evaluation so that we get some of those questions answered that we were intrigued to ask of you today. So we'd like to thank you for being here this morning. Just a reminder that we're going to be back on April 14th, September 15th, and November 17th. So go ahead and bookmark those days in your calendar, April 14th, September 15th, November 17th, again at 7:30 a.m. If you want more information, of course, always go to farmoffice.osu.edu. Again, farmoffice.osu.edu. You can check out our complete suite of farm management, ag law, and ag policy type of information from OSU Extension. And again, we encourage you to share this with your neighbors. They can pre-register for the next one on April 14th at go.osu.edu/coffee with Dr. Lee. So Sinki, we really appreciate you coming on this morning. Again, to the attendees, we thank you for being here along with us today. If you want to go back and watch the recording, just go on to farmoffice.osu.edu. With that, we wish you the best for this week. And until we meet again, thank you, Sinki.
Thank you very much.